New home sales just rocked upwards 20% in 1 month, the biggest jump since early 2022. Existing home sellers are panicking, but builders just took the lead. Demand for new construction surged in August, reaching 800,000 annualized sales. That's 20.5% above July and 15.4% higher than a year ago. Now, according to Census.gov, inventory fell to 490,000 homes, representing a 7.4-month supply. That's the lowest since July of 2023. By contrast, existing home sales ticked down by 0.2% in the same month and remains constrained by low inventory. Now, is this a surprise? We've been saying that new construction is making all sorts of incentives, giving all sorts of price incentives, mortgage incentives. So new single-family homes are soaring to the high level to help clear out some of this initial COVID inventory and set things up for the next stage, which everyone is saying 2027 and 2026 are going to be years of growth. So overall inventory levels for new homes, it dipped to 490,000 units. That's 1.4% drop overall from July. It is 4% higher than a year ago. However, supply stands at 7.4 months. That's a very healthy number, and that's down from 9 months average in July. So let's look at median sales price. That rose to $413,500. That's 4.7% above what July was and 1.9%, so almost 2% above August of 2024. This is a very positive sign that the median sales price for the overall country has risen. I don't like overall numbers like this, but it's good to get that feel of what's really happening in the U.S. housing market. And if you look at that number, 413,000, that is still a high number, and why most builders I'm seeing in these new construction sales are occurring below that level. I'm always saying if you're looking to buy a home or you're looking to get into something that will cash flow or be sustainable as a rental investment property, stay below the median. So according to the National Association of Home Builders, 20% of new homes were priced under $300,000. Now that's nationwide. That's the highest share in 11 months for those types of properties. Again, over 20% under 300,000. Meanwhile, 31% of the properties in new construction were priced above 500,000. Now, what's interesting here, from what I've seen of the numbers, the ones that have held the strongest values pricing are the properties priced under 300,000, and the prices over 500,000, they've had to have the most price correction, but are still selling because builders are offering all sorts of price cuts and builders incentives. On a year-to-date basis, new home sales are up 3.3% in the South while declining in other regions, which is quite against what a lot of the naysayers, the doom and gloomers, and the media is telling you. So with existing home sales scarce and buyers flocking to new construction, builders could be setting the pace on pricing and supply. There's been a sharp rise in these sales, suggesting mortgage rate cuts and builders incentives and some price cuts are working, but a misread of demand could lead to overbuilding if rates rise again. Now, some analysts see this surge as an outlier. They expect revisions and that builders might want to be cautious not to overextend based on 1 month's data. Totally agree with that, but what I encourage people to look at is supply in the different ranges. The affordable markets, again, under 300,000, over 500,000. That is a big divide to see where most of the properties are trending towards in more sales and where it's going down. A builder wants to react to that because where's the supply moving? Where's the supply needed? So here's what we've done in order to compete in today's market and stay viable in some of our main markets like Northeast Florida, Central Florida. We're responding to the needs of the affordable workforce housing under 300,000. This is a very popular realm where a lot of the builders, especially the national home builders, they don't like to go that cheap. They are normally building the highest percentage of their properties, 500,000 and above. These are the properties that are emotional, pretty, people like them, but when it comes to hard numbers in investing, they don't cash flow and they can decrease in values at the most rapid amount of pace because the pool of buyers and renters does dry up. So we focus where there's the largest pool of buyers that can still afford, and there's also, that's for both rents and for purchase. Even with higher interest rates still, with good buyers incentives and fairly priced, there's still activity in these markets and these properties are selling. So builders that are pivoting and sticking to the workforce housing are still seeing results. They are clearing out some inventory, but they are putting more properties on the ground where a lot of the higher end builders, they're having to pull out the brakes and not pull new permits or start new projects because the numbers aren't there and it's still a very unknown market. So for builders, again, look at affordable, look at workforce housing, offer the rate buy downs. If you've got that healthy balance sheet and can work with a bank and buy large tranches of money and pass that mortgage rate of 2021 on to your buyers, that can make the difference in getting over. And you might have to give some price incentives as well while inventory stabilizes. And as you see from a lot of the reports, that should be happening within the next 4 to 6 months. So offer those incentives, work in workforce housing, and that is the best place to be. For buyers, you want to look at your rates. If you can get under 300,000 per unit and you are now able to get an interest rate of 2021, you're beating that waiting because rates are supposed to drop. You can get ahead of it, and especially in new construction, have more incentives to get in a long-term buy and hold property. Okay, so what do you do with this information? Well, if you're a builder, you should continue offering rate buy downs. They're working. I know that the media makes fun of you. You might have given some price incentives as well, but inventory levels are stabilizing. We're seeing that right now from the results we just got. So keep doing it. If you've got that healthy balance sheet that allows you to make deals with mortgage companies and you can get your personal homeowners or investors that lower rate, that can make all the difference for getting them off the sideline. And again, the best way, if you're going to continue to build, I'd be very, very careful in the emotional markets over 500,000, that under 300,000 in certain markets, there is a low supply. And if you're willing to take the risk and build there, we're seeing demand not only from personal homeowners, but we're also seeing investors still buying with healthy rates from buy downs and on those cheaper prices. It's less intimidating to get into one of those properties. And not only is it less intimidating, it actually produces a cash flow from day one. You're going off of today's rates today. That's not going to happen. But as a healthy builder with a good balance sheet, if you can do a builder forward commitment, you can make all the difference in their rate to make that property work. And for buyers, you tie directly into this. This is really important for you to look is now the time. If you're able to beat the rush where we're seeing that rates are going to have 2 to 3 more drops, probably by the end of 2025, is that going to start to cause a surge in the market? Is that what we just saw in August? That first rate drop was announced and seen, and it already started, or it was about to be done. And you already saw that the market started to become more active, started to pick up, and we saw a surge in the affordable properties. That was expected. People who are looking for that cheaper, more inexpensive home, they're trying to be very smart with their money, and they waited for the rates to drop, and now they're seeing that. And you need to ask yourself the question, is now the time to lock in? Are builders' incentives always going to be around? I don't think so. As the market continues to come upwards, then they will not have to offer this anymore. So you want to ask yourself, will you be able to get this rate again? And can you make an offer on a property that makes sense that the builder might take and gets you into a great position looking long term? All of the experts that we follow have said that 2026 and 2027 are going to be growth years, that the inventory shortage will really start to show, especially in workforce housing and affordable houses. So if you have the opportunity for affordable single family homes, duplexes, or quads with new construction, good areas, good warranties in place, management, and those incentives, now might be a great time, because as the market starts to become more favorable, you don't want to get caught in that rush that could start to occur in early 2026. You can get positioned going into the end of the year. Some of you might have a tax issue that you can solve by buying a property before the end of the year. Take advantage of that and look at what is available today that may not be available in 6 to 8 months from now and is really starting to show in the market with these last results. Have you noticed more people touring model homes in the last month, more than resales? Are you comfortable getting an interest rate from today's banks? Are you insistent on getting those rates from 2021, where a mortgage buy down from a builder really makes the difference for your monthly payment to live in the home or to rent the home? These are important questions. Which would you rather have? Do you want to buy that new construction? Or are you comfortable waiting for a resale? Drop us a comment and let us know.